Hello and welcome. I'm Alex Grodnick, and this is Moving Up, a podcast about secrets to success, struggles along the way, and life in general. Today on the pod, David Chan, the co-founder and COO of Farmtogether, a disruptive fintech company that allows individuals to directly invest in farmland. David was put on earth to build this business, as you'll hear in his journey through investment banking, startups, and private equity to now building Farmtogether. The conversation we have is so enlightening, and I just know that you're going to enjoy it. So let's jump right in. All right, David, welcome to the podcast. Thanks for being on here.
Hey, Alex, good to be here.
Yeah. You got a really cool, sounds like a disruptive company, Farmtogether. But I'm so interested in how you got to this company because it's kind of seemed like, just reading your background, that you've kind of been on a march to this your entire career.
Yeah, it's been a funny path thus far. So really, I think how I ended up in farmland investing goes all the way back to something I've been crazy about since I was a kid, which is weather. I'm a total weather nerd. I grew up in upstate New York. I, saw blizzards, tornadoes, hurricanes, you name it. And that led me to studying meteorology in college. So I learned about atmospheric science and weather forecasting and climate change in undergrad at Cornell. And the idea was always, sort of to go get a PhD and do some really great groundbreaking climate science. And in undergrad, I realized we already know what we need to know, in my opinion, on how our climate is changing. And it's a much better use of time and skill today to do something with that information rather than, continue to inquire about it through research. So I kind of made a beeline towards industry. And I picked business largely because I saw how investors, how powerful they can be, how they can cause companies to change practices, change directions, change industries through the power of investment. And so I thought, really voting with dollars is a very meaningful way to get the world to change behavior. And so I thought this would be an area where we could actually potentially help mitigate climate risk and help us adapt in the 21st century. So then it became what industry do I think will be most impacted by climate? The thing with farmland and agriculture is that it has this really unique circular relationship where the way our climate is changing impacts where we farm and what we farm today, but also the way we farm today can either contribute towards accelerating that changing climate or could potentially mitigate and slow that changing climate by sequestering carbon from the atmosphere. So I can't find any other industry out there that has this sort of circular relationship. So that's how I ended up in ag and farmland. And it's funny because I grew up near farms. My first job was as a 12-year-old was working at a nearby apple orchard. Never, ever thought I would be in this world. But here I am. So it's kind of been a full circle.
Yeah. And I mean, it's amazing to hear. I like how determined you've been. I mean, you've laid out, here's my passion. Now, how do I go out there and build a career around that? And that's like, I mean, it's just, you're really fortunate to have had the knowledge of like, oh, I have this passion, and then the wherewithal to be able to like build, jobs and careers around it.
Appreciate that. Yeah. I mean, I definitely think one thing that's been helpful for me is sort of having that North Star of, what's the very small angle or topic that I'm crazy about. And for me, it's always been weather and climate and then just building on that. So yeah, that's definitely my North Star and what led me to co-founding Farmtogether.
Right. Okay. So let's continue on the story. So once you have this epiphany that you want to go into business, you want to do it in the farming sector, like what happens next?
So, I started in finance, in sales and trading. I was at Barclays, and at that time, commodities on Wall Street were not the darling. So there weren't that many opportunities at a large investment bank to sort of get exposure to agriculture. So I actually left after a few years to join a different startup, now a Series B startup called Grow Intelligence. And there we developed basically AI and other big data tools for agriculture for decision makers ranging from investors to government officials, a secretary of agriculture, a minister of agriculture, anyone who would be making decisions based on decisions on agriculture based on various market information. After Grow, I went to business school at Harvard and got my MBA and used that as sort of a pivot more towards the investment side of farmland and ag. And then I was fortunate enough to get a couple of experiences through internships with firms like Prudential and SLM Partners, doing actual farmland investment work and doing actual deals in the farmland space. So that was sort of my path. And after business school, I was working in private equity, investing in agribusinesses. So I had the opportunity to compare investing in the actual asset, which would be farmland, and investing in agribusinesses. And I found the real asset side of it so much more interesting and also so much more connected, but again, with my North Star of climate. And so that's what led me to leave private equity and come back more towards the actual real asset investing side of ag and farmland, and join my partner Artem Milanchuk in founding Farmtogether.
Interesting. So let me ask you: did those investing jobs, both in the real estate and then in the agricultural companies, did that fulfill your passion, for bettering the world, helping out on climate change, or was it just like, these like companies they care about profit so much that it's hard to actually do, well for the world, do good?
Well, I was fortunate enough to work with great individuals and great companies where I did feel like I was able to make an impact in some of the companies that I was able to work with and invest in. So one example would be this company called Pipeline Foods. That when I was at that private equity firm, they were a portfolio company. They're trying to help scale organic grains in the United States and basically create a more robust domestic market for organic grain supply. And they're largely fueled by the fact that lots of the organic grain that we import, primarily from Eastern Europe, has been proven to be fraudulent. So the grains that are marketed as certified organic, but if you actually did quality assurance and you traced it back up the supply chain, these are conventional grains. They were not grown organically. I was able to work on with companies like that, which I think are having a huge impact and transforming our food supply. But for me, I really am super passionate about both sustainable agriculture and also regenerative agriculture, which is an emerging field, no pun intended. And I thought being on the real asset side and being able to, basically decide how a farm operates and what an operating agreement looks like, what are the farmland management practices that will be undertaken. That is, in my opinion, the most impact that you can have in the space today. And so that's why I, ultimately made the decision to leave private equity and come into more of the real asset side.
Yeah, so interesting. So what was that like, leaving a very prestigious, comfortable job and going out on your own? Like, how'd you get the confidence to go do that?
I don't know if it's confidence or naivete, but I think I was fortunate enough to go through a couple of different experiences, both in college and in business school, and surround myself with entrepreneurs and creators, builders, people who have a vision, and if it doesn't exist today, they'll go and create it. And so really for me, I knew farmland investing was accessible to institutional investors, endowments, pensions, foundations, but for retail investors, there were very limited options. There's a very limited scope of public equities where you could argue you're getting agriculture exposure, and then you're exposed to specific company exposure as well. That's well outside the realm of the ag industry. There are a couple of REITs. I'm happy to chat more about that later. But there's a couple of reasons why I don't think that's actually as powerful as direct access into a farmland asset itself. There was no opportunity for a retail investor to have access to what I believe is a really wonderful asset class. And so for me, I think every entrepreneur is told you have to establish product market fit. For me, I saw that right away because I knew that this is an asset class that if it were made more accessible to folks, I think the appetite would be there, given that interest rates are basically 0%. And the market has been incredibly volatile. And you have this very stable asset class that's incredibly important to national security and our well-being and a whole host of really important things. So it just kind of made sense for me. And, I guess it was different than like creating a widget of some sort or like an app to, do the same thing that 10 other apps do. It really, not that there's anything wrong with any of that, but for me, this served a much deeper purpose.
Yeah. Okay. So how'd you get going? Did you guys like buy a farm for $1 million and then say, okay, here, you can invest in $1,000 of this and like divide it up? Or like, what was the beginning like?
I wish our first deal was $1 million. It wasn't even that much. Our first property was $510,000. That was the acquisition. And I believe our minimum investment is around the same that it is today, $15,000. And we sold that to a handful of retail investors, and that was sort of our first deal. And it was, we were unproven at the time. It took several weeks to syndicate just a $500,000 deal. Now sometimes we can't keep up with syndicating a $5 million deal. It'll go in one day. So it's incredible to see how that has all evolved over time. But that's largely what we did. Prior to me joining and to the rest of the team joining, Artem had spent, so Artem Melanchuk is the founder and CEO of Farmtogether. Artem had spent a good year, maybe even a little bit more than a year, studying and creating the blueprint for the execution of how we were going to offer this product and service to investors. When I joined in July of 2019, we still had not actually done a deal. But with both me joining, our director of investments joining as well shortly after, we had the team in place to actually go out and execute. And so in the fall of 2019 was when we put this $510,000 deal together. It's been incredible to see the progress since then. And now, we offer deals ranging from, we don't do any quite that small anymore, but generally on the smaller side, I'd say like 2 million upwards to our largest deal was a $14 million syndicate. So a pretty broad range now of offerings.
Wow. And I guess just backing up here quickly, your co-founder seems like the perfect fit for you. How did you guys connect?
So funny enough, I had a friend from business school who reached out and said, I'm at a CB Insights FinTech conference. I know you're crazy about farmland. There's a guy here who wants to make farmland accessible to retail investors. You should talk with him, basically just connecting the dots. Like, you like farmland, this guy likes farmland, you should chat. So I actually sent Artem a message saying, I'd love to learn more about what you're doing. And I'd love to become an investor. I wanted to actually be a client. And so we met for coffee in Columbus Circle and during this conference. And I was asking him so many questions about the business and what's your first deal going to be? How can I invest? How can I get involved? And we ended up, continuing the conversation. And he asked me to invest with my time rather than my capital by joining the team. So, which I was obviously happy to do because I think this is a just tremendous vision and story to build out. So that's sort of how it happened, and we got to know each other a bit through that whole process. And we have a lot of complementary strengths, which is great. In a founding team, you don't want two folks that are both, great at spreadsheets and terrible at, I don't know, what's different than spreadsheets?
Sales.
Yeah, sales, sure. So Artem and I have a lot of complementary skills. there's another member of our founding team, Olga Ivazian, who has been on the journey even before I joined. She was with Artem from the very beginning, and she has complementary skills as well. So the three of us, really bring a lot of different strengths to the table, which I found to be really wonderful. And then also different perspectives. We've all had different career stories, different experiences, and so it makes for I think a more productive and powerful decision-making team when we're all able to bring all those different perspectives to the table.
Yeah, absolutely. Okay, so David, you mentioned the size of the deals has grown. So tell us, how the business works today. You guys will go out and find a farm and it's up for sale, and you say, okay, well, we're interested in buying it. Then you take it to your platform of investors, and they say, yeah, here, we're interested, and then you can just connect the two, and you guys are the kind of the middleman, and you get a fee for bringing everyone together.
I think that is a little bit too simplistic. There's more than that. We go out, we source, we underwrite the deals. The underwriting process is extremely detailed and rigorous. We're looking at location. We have selected top tier operating partners where if a property falls outside one of those zones, it might be eliminated. We look at climate risk. We underwrite for climate risk, temperature projections, precipitation projections. We underwrite for that as well. We look at water risk. If you're in California, what water district are you in? How does the new riparian rights law, which is called the Sustainable Groundwater Management Act, or SGMA, how does that impact the water rights that are pertinent to that given property in that district? We look at comparable sales and more sort of traditional real estate valuation metrics. What's the gross acre sale? What's the net acre sale value? What's the productivity of the property? Do we have historical information? It's a process.
Yeah.
I would say for every at least 1,000, probably even more, for every 1,000 plus properties we see, only one actually ends up making it to the platform for investors. Once we, I would say, backing up just a little bit, before a property gets to the platform, we go through that whole process. We decide, yes, this property meets our thresholds. We issue what's called an LOI, or a letter of interest, which is basically the same as if you've ever purchased a home. Basically, you're reaching out to the seller and saying, I would like to offer you, X dollars for this property. Let me know your thoughts. And then it can become a negotiation. Sometimes there's a few counters back and forth, and ultimately, hopefully, we settle on a purchase price. Once we settle on a purchase price, we enter into another contract, which is called a purchase and sale agreement. And that's what binds the sale of the property. That's what ensures that we actually have the right to buy it. Again, if you ever purchased a home, it's the same exact process, LOI to PSA. After the PSA is in place and that's been signed, that's when we move forward and begin marketing the property to our investors. So that's when we'll go ahead and put it on the platform.
Right. Okay. So give us an idea of what a typical farm is. They're growing tomatoes and it's 1,000 acres and it's going to give cash flow to all the investors. And then at the end, we're going to sell it. We're going to do XY improvements and then sell it down the line. Is that kind of the investment thesis, or how does that work?
Yeah, the beauty of farmland is there's so many different ways you can structure a deal where you can play with risk and yield and basically create different deals that work, that meet objectives of certain investors. Because obviously our investor base is so diversified, and we have folks who are retired and looking at this as an income producing asset. We have folks who are at the beginning of their careers and they're looking at this as a yield investment. And so we want to structure different deals and different products along that risk and yield spectrum to meet all those different objectives. So it's hard to say what a typical deal might look like. I would say, I'll give you sort of three examples. On the lowest risk, lowest yield side, we would probably say that would be like a row crop lease. Row crops are sometimes called annual crops. They're basically crops that you plant every single year. Corn, soy, wheat. You lease that property out to a tenant. and you're paid your annual rent in Q1 of any given calendar year. So you receive your rent before planting even happens. Typically, planting happens in the spring. You get your rent in Q1. You have basically no risk to operations. So whether corn prices go up 10%, down 10%, doesn't really matter to you. You're basically just managing for counterparty risk, and it's a super fluid market. I think the vacancy rate is like 0.1% or something like that. So, basically it's just a rental play. Those deals typically have cash yields of around 2.5% to 3% net, and IRRs of anywhere from 7% to 8% net. So that's what that's the return profile that you're looking at for what we would consider to be like the lowest risk. We call them the treasuries of farmland investing. Right. As you move up sort of the risk spectrum, I would say the next example, sort of the middle example, would either be a permanent property. So permanent crops would be, it's basically a commodity that grows on a long-lived asset. And you're going to depend on that long-lived biological asset for cash flows for maybe a decade, maybe several decades. So almond trees, wine grape vineyards, apple trees, citrus groves, all examples of those permanent crop commodities. You can lease permanent crops just like you can lease row crops. And typically those leases can get slightly higher cash yields because there is more inherent risk in owning a permanent asset like a tree or a vine. You can also do hybrid structures, which we've done, where you have like a base rent component. So maybe like a 5.5% cap rate or something like that, some rental component, plus a gross revenue share or a profit share. So you have a little bit of upside as well. So I call that, and then like an example of returns there would be maybe like an average cash yield of 6-7%, and net IRR probably like 10-11%. And then in that same sort of return profile, same risk bucket would be what we would call a mature turnkey orchard. So that's a property that maybe we buy today. The almond trees are, say, like 10 years old. So they're in their mature steady state life. They're producing that cash yield year one. We've eliminated a lot of the risk of development because the tree is already matured. You end up paying more for that type of asset, of course, because there's less risk. So you get less appreciation. But again, high single digits cash yields there, and low, double digit net IRR, say 10-11%. And then on the furthest end of the spectrum, highest yield, highest risk would be direct operating permanent assets. So those would be, actually our largest deal today, the Galaxy Organic Apple Orchard. We are acquiring an existing apple orchard. It's been planted to Red Delicious, which is now an outdated variety. We're going to be recycling all those trees, replanting a brand new variety, which is called Cosmic Crisp, and also converting it to organic production. So we're going from conventional ag to certified organic ag. There's way more risk involved because we're planting trees and anything could happen. A tractor could kill like a 3-year-old tree by running into it. And obviously that would be not a good thing. But not that we expect any of that to happen. Assuming that the tree is fully mature, which we expect they will, it ends up being a much higher yielding option because basically you're creating a ton of value by putting in a brand new variety where you can command better prices, better margins in the market, and you also have that organic premium since you switched to organic. That deal specifically had a net IRR of I believe close to 15% and a cash yield close to 20%. So we went all the way from the spectrum of sort of 3% cash yields to 20% cash yields, and IRRs from say 7% IRRs to 15% plus IRRs. So there's I know that was a long answer, but all that to say, there's lots of ways to customize deals to meet different investment objectives.
Yeah, no, David, it's fascinating to hear. I'm interested in farm and the environment, and I literally know none of this. So this is like eye-opening. It's very, very interesting. So how can people like me that's like want to get involved in this and maybe invest or like start just to learn more, like what can we do?
Great question. So, there's so much information out there on We view our job, obviously our duty to our investors is to deliver on what we promise and help them achieve their financial goals. But we also feel we have a duty to just evangelize this asset class and get the word out about the history and how it works and why we're so excited about it. So we actually have a learning center on our website, farmtogether.com. And we have tons of content there, blogs, how it works, articles where we go through, what is an operating agreement with an operating partner? How do we enter one of those? What do they detail? Or what does a development mean? How long does it take an almond tree to mature? What's the process around that? So all those questions on how it works, all of that is on our learning center, as well as information on performance. So we have a white paper where we go through the different annual average returns, mean standard deviations of performance for farmland compared to public equities, fixed income, real estate, a bunch of other major asset classes for the past 30 years, from I believe 1990 to 2020. So even if you're maybe less focused on how does the actual farm work, and you're looking at this more from an investment lens, and you're wondering what does the Sharpe ratio look like, or what does past performance look like, we have that information as well. So all that's available on our learning center. I would definitely recommend anyone who's interested in learning more about farmland, go to our website and sign up for an account, which is just farmtogether.com.
Awesome. Well, I'm doing that, David. This was really delightful speaking with you. I loved hearing your story and what you guys are doing now to better the world, change it. And I wish you all the luck, because this was really enjoyable speaking with you.
Thanks so much, Alex. Appreciate it.
Thanks for listening today. If you like Moving Up, the best way you can support us is by telling your friends and leaving a review wherever you're listening. Thanks.